Hi everyone, welcome to another episode of The Naive Investor. In this episode, we are turning the spotlight back onto Gamestop. On Wednesday, after our trading, saw the stocks move up by almost 100% from $42 to $93. And on Thursday, pre-open price was hovering 70% above that at $169. Although Friday's session saw the stock close lower, we'll examine the likelihood of a successful squeeze. So, what's got the stock moving in on a frenzy again? It is hard to tell. It could be the fact that the value doubled down on his position in GameStop after stating in his testimony on the 18th of February that he likes the stock. Or it could be just of a tweet of McDonald's soft serve by Ryan Cohen, a GameStop board member. Brief recap of what short selling and short squeeze are before we go on. Basically, short selling is betting that the stock will go down. A party would borrow stocks and sell it in hope that when the stock goes down in price, they can then buy it at the lower price, then return the stock to the lender and pocket the difference. A short squeeze happens when there are no stock left for the short sellers to buy back because all the stocks have been bought in anticipation by the opposition. Looking at GameStop short data though, we can see the current short volume is only 1/3 of the previous volume. Meanwhile, the float size, the number of shares that are readily available to buy and sell, is more than 51 million shares. So in order to squeeze the short sellers, a big portion, if not all of those 51 million shares need to be purchased and held. If we take the closing price on Friday, which is around $101, 51 million shares would be approximately $5.1 billion. Let's say that a retail investor on average will purchase $5,000 worth of GameStop shares. For the squeeze to be successful, they will need just over 1 million traders buying the shares all at once. For simplicity's sake, let's say members of the Wall Street Bets are the ones who want to short squeeze the institutions. The group would have more than enough members to do that. Currently, Wall Street Bets has 9.3 million members. Since the first squeeze, it has gained an additional 1 million subscribers. However, it is hard to estimate the proportion of the subscribers that are still as enthusiastic as last time. That being said, if only 20% of those members are willing to participate, they would still have 1.8 million members to short squeeze. Keep in mind this is an oversimplification of the situation because 1 million retail investors won't be able to get the shares all at once. This means the share price would increase for subsequent buyers. If we keep the $5,000 budget constant, then each subsequent buyer will own less shares as the price increases. And as the price increases, the risk becomes higher and there will be less willing participants. For an effective short squeeze to happen, there would need to be a coordinated effort. However, such coordination might single an individual out, exposing them to the risk of being charged for security fraud and manipulation. About 1 week ago, Keith Gill, otherwise known as Roaring Kitty on Twitter and D Value on Reddit, testifies to the House Financial Services Committee about his apparent promotion of GameStop. He denied the allegations, drawing comparison between his post on Reddit to casual chats about stocks between friends and like-minded individuals. This is a very reasonable justification. However, it shows the willingness of the system to find someone to point the finger at. There are other risks that retail investors need to consider for this round. They are the chances that the trading platforms will find another excuse to hold trades as they see fit. Also, hedge funds have had an entire month to come up with maneuvers to avoid the same fate as last time. This means that retail investors should be a lot more wary when deciding to get on the roller coaster. Also, the short volume this time is significantly less than last time, and with their purchasing power, the funds would be able to close their positions before being squeezed out. Short squeezes are not a new thing. In fact, looking back over the decades, there are a few notable short squeezes. In 1923, the short squeeze on Piggly Wiggly short sellers was unsuccessful. There were a few reasons for this. Firstly, Clarence Saunders, founder of Piggly Wiggly and sole investor, overestimated the amount of short shares and underestimated Wall Street's influence on New York Stock Exchange. Also, he over-leveraged on his trades. Despite making a profit on the squeeze, he still had to pay back the money he borrowed from the bank. This led him to bankruptcy. Meanwhile, in 1862, Cornelius Vanderbilt successfully short squeezed Wall Street twice. The first time was with Harlem Railways and the second was with Hudson Railways. Vanderbilt did things differently to Saunders. Firstly, he bought the shares with his own money rather than borrowing from the bank. Secondly, he was more strategic, planning his moves ahead of Wall Street. After short squeezing Wall Street on Harlem Railways, he started spreading rumors that he was low on cash, but in fact he was secretly buying futures of Hudson Railways instead. Wall Street took the bait and started short selling, thinking they had a head start and Vanderbilt would not have the money to buy Hudson Railways. In the end, Wall Street underestimated the little guy, which led to their demise. All in all, I am of the opinion that maybe the funds will get away this time again. As impartial as the trading platforms try to be, I have no doubt that Wall Street have infiltrated them. Of course, I could be wrong and something dramatic is coming. And like Vanderbilt, a well-laid plan is playing out under everyone's noses, just waiting for the right time. But until then, I will watch cautiously on the sideline and celebrate what would be a big win for the little guys. And that is pretty much it for today's episode of The Naive Investor. Please keep in mind that none of the videos on the channel constitute financial advice, and everything I say is of personal opinion and research. And individual research is something all investors and traders must do. However, if you like what you just watched, please share, like, and subscribe to show your support for the channel. It does take a lot of time to prepare for these videos. Until next time, stay safe and keep looking for opportunities.